Good job, Yusuf. Hello, everyone, and thank you all for joining us. The future of the global economy is unclear and definitely not certain. Of course, it's due to the high inflation rate, the highest in 40 years, war in Europe, energy crisis, lack of food and water security, trade war, geopolitical influence war, and a potential wider global recession that might be painful and long. So what does that mean for the road ahead, and what does it mean for investment? I am lucky to be joined by a distinguished guest, who is rightly positioned to answer those questions, Mr. Bruce Flatt, the CEO of Brookfield Asset Management. Thank you for coming along and giving us the time today to ask you about where we should invest our money in such a difficult time.
It's great to be here. Thank you.
So I've got literally 10 minutes to set the scene. So I'm going to ask you the first question. Do investors need now to prepare for a period of a higher structural inflation?
Look, I think I would say, and I listened to the last panel, but our view is as follows. We had very, very low inflation for a long period of time, and we were petrified of deflation. The good news is we're in a period where we're going to have higher inflation. Right now, it's too high, caused by money flooded into the system for a short period of time, and we need to crush that inflation, and the central banks are going to do that. We may not like them doing it, but they're going to do it, and they know how to do it, and that's the really positive news. So we are going to have higher inflation, I think, but we had too low, and that's actually really good for many, many businesses. Some inflation is good. High inflation is bad, and they know how to deal with that.
Is return to the Fed's 2% target, not only the Fed, ECB, and so on, is a dream?
Look, maybe they can get back there. If not, it's fine-ish. It needs to be low. It can't be high. Whether it's 2, 2.25, 2.5, 1 3/4, they'll get somewhere and they'll be satisfied with where they get. And the point is they need to get, what we really need to get rid of is high inflation. We don't get back to the 70s.
And that will definitely have a long-term impact on the investment. But before we get to investment, I have one question more on the interest rate. The federal funds rate is between 3% and 3.25%. How more the Fed needs to increase in order to first slow the demand and probably push people to park their money and not invest? And by saying people, I mean individuals and businesses.
Yeah, look, I would say they need to get to the point where the economy slows. The central banks of the world are now accomplishing that. What's happening underneath, and we see it, we have 300 businesses around the world. We're seeing it everywhere, more in Europe than anywhere just because of the energy situation, but we're seeing the businesses slowing. Normally, that's a problem. Normally, you see a recession's coming, that's a terrible thing. It's actually an excellent thing today. We're going to have a recession in most places in the world, and that's a positive thing. It means that we're getting rid of this tension out there, and the central banks, the governments of the world are slowing the banks from lending, and they're raising interest rates, and they're doing their job, and they're actually doing an excellent job at it, and they're going to have to do more, but not that much more, because it's clear it's working.
Mm-hmm. For the investors in the room, it's going to get exciting now. Bruce, you manage $750 billion assets under management, and you do it right if we look at the numbers. Tell me your secret.
Yes.
What's the secret? How did you manage them? And especially that you see, back in 2020, end of 2020, the company anticipated that we are heading to a higher inflation rate. And you loaded up with real assets. And you've been always very vocal about that, saying how important it is to invest in those real assets. Tell me more about it.
Look, our view has been that real assets in privates are the place to be for investment funds on a global basis, whether you're a large family, whether you're a small investor or whether you're an institution. This is the place to be because you don't get confused by the public markets. You can invest in value. You can use the public markets to advantage your investments. And over time, they earn very good returns. But most importantly in this environment, these type of assets, infrastructure and real estate, are positively disposed and impacted by inflation. And so every year or every once in a while, the cash flows adjust. And because you put a lot of money in up front, the margins get fatter. And that's very positive for real estate infrastructure and most real return assets.
So what is the real impact of inflation on those assets? If I ask you about the cost of building a real asset today compared to 3 years ago?
Look, it's, and normally this is sometimes a negative thing, but today it's a vastly positive thing if you're in the businesses that we're in. Inflation has taken construction costs up, probably on average globally. If we look across all of our countries and markets and products, it's probably up 25 to 30%. And what that means, it doesn't, some businesses it hits it right away, positively. Some it doesn't hit it until later because your cash flows are locked in. But what it means is either you have a huge margin of safety, the next person to build the next real estate or toll road or power plant is going to have to pay 30% more. And if they pay 30% more, it means the competitor is at a higher price. And therefore, for anybody with in-place assets, it's a very valuable thing. But so cost structures are up, and that just means globally, and this is part of, back to the first question, is inflation subsided? It isn't totally, it's going to be higher because we do have to make up for some of this. Now, some of those costs will come down, but there's no doubt it's going to be more than we had in past, which has been our issue for a long period of time.
Mm-hmm. You have a huge renewable business. How does renewable and transition fit into all what you're saying?
Well, look, first on to the inflation factor, most panels come from China. There are some tariffs in some countries on those. Supply issues have been a problem, and that has escalated costs. The good news is the world is now in a transition to net zero. And I make the point transition. Nothing is ever shutting off quickly. It's a transition to net zero, and renewables is a really important part of that. So while costs have gone up in renewables, just like everything else, the revenues you can earn because people need renewables are commensurately going up, possibly even more.
The main reason behind the market downturn now is the high inflation rate. And of course, the change in sentiment waters down the distinctions between bad businesses, average and excellent. How do you actually, what's the criteria you follow when you look at a new business to do in terms of where and how and the return and even the sector?
You know, we obviously have a lot of businesses in a lot of countries and a lot of places, and we have, I crystallize our theory of business is buy great things with great people in great places. Buy great things with great people in great places. And if you follow that rule, you essentially can live through periods of time. There will be high inflation, there will be low inflation, interest rates will go up, they'll come down. We've been doing this for 35, 40 years, and we've been through, you name it, number of recessions and crises, and the bottom line, if you buy great things with great people in great places, increasingly here in the kingdom, we're going to do well over those periods of time. And that really is the success of business, but in particular with infrastructure, real estate, and businesses that revolve around it, like our private equity businesses.
If I ask you, what are the challenges the world faces today, and they keep you up at night, what would be your first three?
You know, look, I used to always answer that question in that interest rates was my greatest worry because they affect the whole world and the macro environment around you. The good news is we've just seen extreme increases in interest rates, and what I can tell you is anybody that was prepared, that was doing their business properly, is in great shape today. And even though we've seen those extremes, most of our financings are fixed rate. They will adjust over time. Rates will come back down. It's not, that's not a big worry today. For us, it's just running the scale of operation we have, which is always fun, but also a problem.
One last advice to the investors. Do you park your money now or you invest them?
I park everything in Brookfield shares.
Good advice. I think you should listen to him. I don't have money, but I'll tell people with deep pockets to do that. Thank you very much, sir.
Thank you.
Thank you.